This is the quickest way to go from AI.
Hey guys, good morning everybody. Today is what is today? Friday, January 2nd. Happy New Year's everyone. It is 6:26 right now. We have market opening up in about 4 minutes. Yeah, so I'll give it a few moments for people to make their way in. And then we'll get started shortly. I'll be looking for criteria here for the breakout as market opens up. But all right, guys. So before we get started, just a quick reminder, futures trading involves substantial risk of loss and isn't suitable for all investors. You can lose more than your initial capital investment. Nothing you see here should be taken as financial advice or solicitation to participate in any trading program. Everything I'm doing today is for educational and informational purposes only. I'm just walking through my own analysis and my own trades. Past performance does not guarantee future results, and if I reference any backtest or hypothetical performance, understand that those results have limitations and don't reflect actual trading. Cody Kite Capital LLC is registered with the CFTC as a commodity trading advisor and is a member of the National Futures Association, NFA. I may hold positions in the markets as discussed, and my views may change at any time based on market conditions. And that's about it, guys. So let's get started. All right, looks like people are still making their way in. So let's see who's here so far. Morning, Steven. Morning, Mendez. Morning, Daniel. Morning, Lila. Morning, Rev. Morning, everybody. So let's see what we got here. Steven is looking for the breakout on open. So the breakout on open, let me just put in the criteria over here. So for the breakout, I believe it's against momentum. Yeah, so with momentum here, it has a 25% probability of it winning overall, so that's not good. Against momentum over here, has a pretty decent probability. So what I'm going to do here, and you'll see that I've done a couple of things here. When I'm looking at the data here, guys, this isn't super necessary for everyone, but what I'm doing here is I'm looking at it from a long-term perspective, right? Because looking at it from a long-term perspective, meaning that there's a rolling basis with regard to the statistics, it gives us a better idea of like what's working, what's not working, and if it actually works long-term, right? So I have three windows over here with a rolling basis. So I have this over here, which is a 20 trade sample. It shows that against momentum has a 60% probability of it winning. It has a 10% max equity drawdown and a profit factor of 2.337. Over here, I have a 40 trade sample and it's still profitable, but it's not super great, right? So it shows that the consistency here isn't it shows that the breakout isn't always hitting against momentum. It's just like during certain periods. And then over here on the 60 trade sample, it shows that it's even better, right? So it's kind of ironic. It's weird. It shows that like some days the breakout is working one way, and then some ways the breakout's working the other way. And that's why you have to be consistent with what's active at the time. So for the breakout today, it's going to be a sell if you're looking to take the breakout. You hear that, Steven? Sell. Okay. Market's going to open in about 16 seconds. But again, like I said earlier, guys, over here, the looking at the data that I just showed you guys, they showed you guys that the breakout isn't always going to be one directional, right? It's always going to be whatever's working at that specific time for that specific period. So with that being the case there, the trade is running right there, Steven. Hopefully you caught that because it looks like it already hit full target. I don't want to hear Steven saying you missed it because I did tell you pretty clearly it was a sell, Steven. So I'm hoping you got that trade right there because that thing did hit your target. Okay, perfect. You should be out of it, Steven. It literally hit target already 60 points. But you can hold on to it. It's probably going to push further. All right, Steven, you're off to a good start. You actually paid attention today and you got the entry in. So I'm glad you caught that right there. So I'm hoping you got out, Steven, because it already hit target. I don't know how far you're trying to get into it for or push it for, but it hit target already. So, all right, Steven is a good start for his trading year with a win right there for the breakout. All right, other than that, hey Kenny, morning. Yeah, I'm not sure how far you're trying to hold on to that, Steven. I mean, you could push further, but if you're following the strategy, should have been out by now. Okay, anyways, I'll leave that to you, Steven. You can do whatever you want with it. But the first listed entry is going to be at 646. Like I said earlier, guys, when I'm taking entries, I am trying to identify um, consistency, right? I think the main thing that I'm looking for here and that I want when I'm taking these trades is I'm looking for consistency with the trades. Not with the breakout, of course, because like I mentioned before, with the breakout, this thing is something that comes up very randomly sometimes, right? It's not always going to be consistent. And this is a clear example, right? Because in the past 20 trades that came up, it has a 60% probability. For the past 40 trades, it actually wasn't good because it kind of shifted a little bit, right? I think it was between with and against momentum. And then if you look back over here at a 60 trade sample, it's actually better than the 40 trade sample, which is very ironic, right? Because it shouldn't be like really good, right? Profit factor is 2.333. And then it shouldn't go from like really good to really horrible. It's like like not even one profit factor. And then you go to a 60 sample and it's back to 1.43. So I think long term, the breakouts might be good with against momentum, but this shows you that it's very inconsistent, right? So that's the whole point that I'm trying to get across to you guys, that it's inconsistent. So the breakout is great if you take it. You do have to understand that you're going to have very heavy drawdown periods like this right here. But that's why it's important that you guys are always looking on the shorter sample size. So yeah, we will continue following. If you guys are looking for the MPS V2, the MPS V2 is going to start to set up pretty soon, I think. If you guys saw Masij, you have to be in the premium. Masij has the backtesting script here for the MPSV2. It's actually really good. If you guys look at the statistics here, these are the statistics for the MPSV2 between 6:30 market open and 8 o'clock for a whole year, right? This is a whole year data without my discretion. It's actually really, really good. The one thing I didn't do, so this is like without avoiding the sessions. If you're to avoid the sessions here, the probability is actually even higher. So if you take trades that are not at the sessions, or are you taking trades that are like too close to the sessions, the or actually this thing doesn't look right. Hmm. Or maybe this is right. So Masij, I don't know if this looks right to you. I haven't really looked deep into it, but I'm just looking at because there's only 45 trades in a whole year. It could be right. I mean, I don't know. I'd have to kind of play around with it. So, anyways, but it does show. So the settings are good. What I did is I just turned on the avoid trading near session levels. This could be correct. I mean, it could be completely correct. With an ATR of 0.5. You know, I just realized here that I took this off too. Oh, okay. Never mind. Wait, never mind. Daniel just mentioned it's because the dates. I thought we had it set to a year, so let me go to a year. Yeah, okay, no, that makes sense. The default was just for a couple months. I was like, that doesn't make sense. There's only 40. Okay, no, this is really good. So here's for a whole year, guys. These statistics are actually pretty good. So you look at this, it's 421 trades. It has a 36% win rate probability for both directions. The max equity drawdown is very low. It's 1.88. And then the profit factor is 1.11. It's not great, but it works for like because we have it set to only trading during like certain time periods. And then if I turn on avoid trading during sessions or at sessions, so it's at 36, goes up to 38. The profit factor goes up a little bit. So I'm going to play around with this to kind of figure out like what criteria is best, of course. Obviously there's some periods where like the strategy doesn't really work very well. And you can see it from like the equity chart here. So, I mean, there's a period right here in February where it just has a lot of losses, right?
Connection.
And I'll have to take a look at that. I'll have to go back and just see like what happened during that period, what caused that to happen. Um, and this is using a 30-60 TP stop loss. If we use something smaller, I think something smaller might work better, like maybe a 40-20. because these are small trades, right? So let's see. I'm going to try to update it. It's at 38.64. Let me see if it goes up at all using a 40/20. Yeah, so it goes up a lot, quite a bit. I mean, we'd have to play around with it to kind of figure out like what the criteria should be. So that's 41.25. Let me see what it is at like 30, because typically this trade was supposed to be like a 10-point move, right? Um, it goes down a little bit, so that's actually not a good. So let's just do the negative risk reward. I know that we're probably not going to use this, but I want to put this in and see what the probabilities look like. Yeah, it's about the same. So you kind of see it here. You have some pretty heavy drawdown periods, but for the most part, it's kind of the same. So like just looking at this in general, I'm looking at the profit factor here. Like 60/30 actually works pretty well for the most part, having it pretty balanced and like one trade a day type thing. Yeah, I mean the profit factor is decent. I mean there's always going to be ways to improve on this. It's really just studying the losses right here, like where it starts to lose. I think these are just periods where you should just not trade the specific strategy. Um, like I'm just looking at the dates here. These are like when the tariff news started coming out. So I think that's when the market was super choppy. It probably would have stopped out before it reached target. And there's probably news on those days. But again, that's something I would just go pretty deep. So this would be an MPSV2 setting up right here for those of you who are looking at it. Yeah, I was looking at the ATR too. So let's look at the statistics for the ATR. So like this is with a fixed TP stop loss, and this is with ATR. Let me update. It's at 38.64 for a year's data. It's updating. It goes up quite a bit. This is well, the win rate goes up quite a bit, but the profit factor goes down. So I think it's probably better just to stay fixed, right? So yeah, the win rate might go up a little more. Let me see how many trades are there. So 383 trades, 48.30 probability or win rate, and the prop factor is at 1.197. That's because the TP stop losses are static. They're not the same. But if you use a fixed one, like we used fixed earlier, let me see if the trades change a lot. I don't think they do. They shouldn't. Yeah, they don't really change very much. The win rate goes down a little bit, but the prop factor goes up. So I think the fixed actually works better. Because these are going to be more important. Profit factor and max equity drawdown is always going to be better. It's always going to be better when it's fixed in a sense because you're always going to have you're gonna know exactly how much you lose and how much you win. With using an ATR based criteria, it's always going to be different because the ATR is always going to be different on certain days, which could be a good thing and it could be a bad thing. It could be a good thing when like it's your trades win because you'll make more profit. It'll be a bad thing when your trades lose because you could lose more too. All right, so there's an MPS V2 currently running right now, guys. I'm not in the position, but it's currently running right now. Um, it almost reached target. So, like, we've been talking about this over the past couple months, guys. Everything we're doing, the strategies are the same. It's just we're trading everything based off quantitative data, right? Everything is all quantitative now. And thanks to Masish here, he's able to quantify a lot of the strategies. Not all of them right now, but for the most part, he's able to quantify the MPSV2. It's about to hit target right there, full TP. If you caught that, did you catch that, Masish? I know you were thinking about taking these trades here. Okay, nice. So Masish caught that right there, full TP on that MPSV2. I think the MPSV2 is a really good strategy to quantify because this is based off pure price action, right? Um, I wouldn't say necessarily technical analysis in a sense. I mean, it is technical analysis. Price action is technical analysis, but when you turn this into a strategy where you can quantify it, it helps dramatically, right? It helps so much because you know the data behind it. You can trust the strategy. Like you can take every single trade and you can be okay with taking losses because we have the actual statistics behind it showing that, okay, this strategy works a certain time period. And it shows here that, these trades should never run more than 10 minutes. So it's ever running more than 10 minutes, then It's, you probably should get out of the trade. Paul's asking, will you explain that strategy? This is a strategy we've been using for years, Paul. This isn't a new strategy. It's just we've quantified it. We have the data for it now. It's the MPS V2. You can find it on the course. If you log into the course, it's gonna be the first strategy, I think. Um, it's right here. It's yeah. So it's under directional strategies. It's module 6.0, momentum pullback scout V2. So if you guys have access to the course, which most of you do, if not everyone, if you want to understand that strategy, this is a strategy we've been using for years. This is like one of our main strategies. Is Barack even here? Let's see. I don't know if Barack's here. Anyways, this is the one that Barack has ha introduced to me a long time ago. He had a different way of applying it, but I improved it and I just made it better, more accurate, just a lot better in a lot of different ways. And we've just quantified it. So now we have the statistics behind it. So we know how the strategy works long term. Um, yeah, I mean, it's pretty good overall if you want to look at the statistics here. But yeah, so now that we have the data for this might be a strategy that we'll also incorporate into here's what the shorter time frame that we might incorporate into our actual entries for the hedge fund, right? I mean, if it's that good, then obviously you should incorporate it. Um, yeah, so right here in a 30-day sample, or yeah, 24 trade sample, the profitability is really good. Profit factor is at 2.315. Max drawdown is less than 1%. Um, Total trades, 24 trades, profitable trades. It's do it on 1 to 2. This is really good, right? It's a 54% win rate probability. You just need above a 33% to be profitable using a 1 to 2 risk to reward. So the statistics here are really, really good when it comes down to, this specific strategy. I'm curious. I'm gonna go entire history and see how many trades show up here. And we'll see. If you guys are looking for the algo entry still isn't up yet. It's gonna come up in a few minutes. Um, I'll just put it up right here. I'm just gonna this is gonna be against momentum, so it's not gonna be a trade that I'm looking to take. The only target entry for today is really it's at the end of the session, guys. So just keep that in mind. You guys are we're gonna be hanging out for a while before the actual target entry comes up. And I'm not even sure if it's gonna come up because it's so late in the session. Um, and I'll look at the statistics and I'll show you guys like what we're looking at and what looks good, what doesn't look good, etc. So this entry right here, that's against momentum. This is one that I don't find to be very, very consistent, right? This is just like the breakout. It doesn't mean it's not going to work or it's not going to hit, but it's a strategy that I find to be inconsistent in a sense because so here's a 20 trade sample, right? So over 20 trades, this entry that we're looking at set at 646, this is coming up in about 2 minutes. This is against momentum for a buy. The reason why this is inconsistent is because it does show good statistics here for a 20 trade sample. So like short term, the strategy is working, right? It's working good right now. So like within a 4 week period, the strategy is okay. You can see over here from the equity chart, it kind of loses a little bit, then it wins, and it loses, then it wins. It's not like a bad strategy, but what I'm saying is like this isn't something that you would like oh every day at 646 I'm gonna take the entry. And the reason why I say that is because if you look over here, it looks good for 20 trades, right? Now let's look at 40 trades. Like what happened here, right? It went from having a 2.079 profit factor to 0.885, right? If it's not above one profit factor, you shouldn't even look at it. It's not worth looking at. But here's the crazy thing is you go over here on the 60 trade sample and it's actually good. So this is why the against momentum trades, I don't like using them because there's no consistency with them, right? Um, the against momentum trades, they're good in a short-term aspect. So like if you're doing against momentum trade, they're like quick in and out type trades. They're not the type of trades where you're like, oh, I'm gonna take this, I'm gonna hold on to it, or I'm gonna take this every single day and I'm never gonna change, right? That's why for the breakout here, I don't like taking it. It works, but it's like it's not, you can't trust it. It's like it's one of those things that you just can't trust because you don't know if it's going to be with momentum or against momentum. There's no consistency. So, yeah, like, yeah, again, looking at the data here, if you were to take this strategy or this trade for the past 4 weeks, you'd be doing great, right? If you take this trade for the past 8 weeks, you probably wouldn't be doing so great. But if you took this trade for the past maybe 3 months or 4 months or 8 months, whatever it may be, you'll still be good. You'll just have some heavy drawdown, right? You have a period where it draws down very, very heavily, but then you'll come right back. So you'd have to be able to have like a really big account size to be able to stomach this drawdown to survive this period, right? Because there's a middle period where the strategy just sucks because it goes from against momentum to now with momentum, if that makes sense to you guys. So I mean, this stuff might go over you guys' head. It makes sense to me. It makes sense to Siege. It makes sense to majority of people, or not majority of people, but people who understand statistics and like understand why is the data is showing this. Um, But yeah, that's like this is a clear example of why we avoid against momentum trades because it just doesn't make sense. I mean, it makes sense, but it doesn't in a sense. If you want to, tr it's not a trustworthy strategy. So the entry is running right now. If you guys want to take it again, if you guys are going to take these against momentum trades, you have to take them and it just hit full TP right there. So like I was saying, if you're going to take these trades, you have to be able to focus on these on a shorter scale, right? You have to understand that this strategy is working for now, but it's not something that you should be following and focusing on long term. But anyways, two back-to-back wins so far for the day, guys. We had the breakout over here for a full TP. Um, yeah, breakout right there for a full TP. And then we had the trade right here at 646, which was the first listed entry on my algo list. So if you guys have access to my algo or if you have access to the Discord or the premium, I posted the trade there under algo. And this trade came up right there for a full TP. So I'll put this in the statistics or the spreadsheet or whatever. This is a win. I'm not counting it as an actual win, but I'm putting it in the notes for the against momentum type trades. Or three wins actually. Thanks, Paul, for the heads up. Yeah, so breakout win, MPSV2 win, and first algo entry for the years as well, also a win. So we're off to a good start. Three back-to-back wins right here so far. Again, breakout win, uh MPSV2 win right there, and algo win right there. Oh man, you guys can hear my Ninja Trader in the back. So many connection loss. Like, when will it end, right? All right. So guys, just another reminder, if you guys are a hedge fund client, we're transitioning to StoneX. We have already started the transition. I've onboarded maybe 10 or 20 people already. If you guys want to transition it to StoneX, let me know. If you guys want to stay on NinjaTrader, that's completely fine. Just let me know that as well. So I can just leave your account on NinjaTrader. I'll still be trading on NinjaTrader because I'll be trading my prop accounts, so like Apex and stuff like that. So if you guys want to stay on NinjaTrader, that's completely fine. Just understand that the slippage sucks and the connection sucks and a lot of it just sucks. So like, you're gonna experience slippage, whether it's in a good way or a bad way. But just don't be surprised if you do see some slippage on your account. It's the whole reason why we're moving to StoneX. All right, so let's keep following here and we'll see. Yeah, exactly. Masih said slippage is never good in the long term. Yeah, because you have enough slippage trades and it eats into your profits like so bad. It eats into your profits for the entry and it also eats into your profits for the exit. So like, let me show you guys an example of slippage. This is what's been happening to us a lot. This is why I had to make the change to StoneX, which is an institutional broker. Um, so like, say for example, your entry, say you wanted to take an entry right here, right? This is your entry for a sell. And this is what happens with a lot of people. I mean, it really sucks that this happens is that like you want to enter right here, right? This is your entry point, but you actually end up entering like right here. And then what happens is your stop loss gets dropped down to like right here, right? So this is what happened a lot. So this is like what the entry would look like. And then sometimes people would enter right here. And then what happens is it retraces up a little bit. It stops him out and then it comes right back down to target. So some people would win the trade, some people would lose the trade. in some situations like this where people would just move their stop loss higher to fix that, then if price pushes up higher and stops them out and we lose, then you lose more profit because you were supposed to only lose 30 points and now you're losing like 40 points, right? Or 50 points, whatever it may be. And that's why the slippage here sucks because it's horrible. The thing is like it's good when it works in your favor, but for whatever reason, it tends to happen when it's not in your favor. And then here's another example too. So say for example, you enter down here, your target's right here, but your target ends up being down here, right? Because of slippage. So this is another thing. Sometimes people will like enter a position and like retrace and come back down, and then it'll reverse from right there, right? And what happens is they get trapped in the position. So now you're stuck in the position. The trade technically won, but you end up losing, right? Or here's another thing. Price ends up, you move your target to where it's supposed to be, and then you were supposed to make profit down here. And what happens is the trade takes you out and then you lose out on so much profit, right? Because your target was 60 points. You only got out at like 40 points or whatever it may be. So, this is why slippage is like really important long term because you start to have, you have two or three or four back-to-back slippage trades, it's going to cut into your account pretty deep. Like if you're anticipating on only losing like $100, you're going to end up losing $200 or $300 or $400. And then, four or five of those trades come piling up and then you end up with way more losses than you should have or way more of a drawdown than you should have. Kenny's asking what's StoneX? StoneX is an institutional broker. You can't sign up to it. You have to sign up through, like I have to sign you up. We'll have to get you the account through StoneX. Only my hedge fund clients can get it. If you guys want to trade with StoneX by yourself, you have to be, fuck, man. You guys heard the Ninja Trader. Every time I hear the Ninja Trader say connection loss, it always stresses me out. I don't know why, but it always stresses me out. And I'm like, because it can really screw with my accounts or my trades. Um, Let me double check. Okay, everybody's accounts, my accounts are good. Yeah, NinjaTrader is just such an unreliable platform now. It used to be really good, but now it's just not good. But anyways, back to what I was saying with StoneX, Kenny. You guys, a regular retail trader can't sign up with StoneX. It's an institutional broker, so you either have to come in with an institution or you have to be bringing institutional size, right? If you guys look up StoneX, they're one of the biggest. Institutional brokers out there. They're one of the only institutional brokers that are not a FCM bank. Like they're not a bank. It's not like a Chase Bank or a JP Morgan or whatever it may be. They're a broker, but they're at the size of the banks and stuff like that. Um, yeah, I mean, if you want to look into it or if you want to see the brochure, I have the brochure here. I can send it to you guys. This is StoneX. Basically, it has, all of their offices throughout the world, their services, commercial, institutional, market intelligence, etc. But again, you as a retail trader, unless you're trading like 100,000 per trade or anything like that, if you're not trading institutional size, you can't sign up. You can't even sign up with them. If you want to go to the website, there's no way to sign up here, right? You could try to sign up. Um, let's see. So if you were thinking about signing up, you can go to there's no sign up button here. There's a contact us button. So you could put your information in here, but they're not going to sign you up unless they have like a retail side, which is different. But if you put your information here, an account manager will reach out to you. They'll ask you how much size you're trading, how much volume you're putting into the market. If you don't meet the criteria, they're not going to sign you up because you'd have to have enough size to actually trade with this broker. So yeah, it's out of reach for the normal person. So Kenny, unfortunately, unless you're a hedge fund client, you won't be able to sign up with them. Um, Even if you did sign up with StoneX, you wouldn't be able to trade with them because it's only for the hedge fund clients who are managing the accounts. So yeah, I mean, if you guys are a retail trader, your best option is probably going to be NinjaTrader or there's a lot of options out there actually. So there's NinjaTrader. There's man, I forget the other name. Interactive brokers or interactive, whatever it is. Yeah, interactive brokers. I think that's what they're called. They're also good too. I don't like their platform, but they're good, broker wise. Other than that, I don't know what else. There's a lot of options though. So you're not limited to NinjaTrader or Tradeovate. NinjaTrader and TradeOvate have nice trading platforms, but I think in the long term that they're not like the best. Most people know them because of the prop firms, right? Most prop firms use them, so that's why they're used. But for the most part, I don't think they're the best option. All right. So, anyways, back over here. Yeah, exactly. Masisha, there's so many options. Your research, yeah. There's just too many to choose from. Obviously, you want to go with the bigger name. That's always going to be the You want to go with the bigger name because if there's any problems, they can fix it. So the thing with NinjaTrader is they are a bigger name, but they probably won't fix your issue. Or I mean, they will, but if they're going to give you a hard time um, trying to fix your issue. Because I've had issues with them, with the disconnects and slippage and all that, and you never really get a solution, to be honest. And most of the time, it's like a bot talking to you. The good thing with Sonix is that we have like an account manager. So like whenever anything goes wrong with your account, like you can contact him as well. Um, there's someone to actually help you on the other end. All right, so looking at so Daniel took the MPS V2 right here. This is against the trend, so I wouldn't have taken it, but if you guys wanted to take it, that would be an MPS V2 setup. Buy signal retracement confirmation on this green candle right here. That would be an MPS V2 setup. So over here with the backtest script, you can see the current state right now is waiting for the pivots. It's looking for price to swing above and and confirm that it's going to be pushing up and through that area. Oh, this is one thing I wanted to ask you, Masij. What does the other colors mean for the momentum here? Or I mean, it's not momentum, but I'm like, what's this right here? The shaded area. I could see what the green and the red is, or I don't know why is this orange, but I don't know if there's a meaning behind it. Not that it matters, but I'm just curious. Let me see if there's maybe you labeled it here under style. Unless it's setting up for the New York highs. Here, let me check actually. Actually, now that I'm looking at it, yeah, it might be setting up for the New York highs or New York lows. Anyways, all right, back to our main chart over here. Let's look at our list of trades and whatnot. All right, so we had one trade come up over here. This is with momentum. It's at 658. This is actually one of our entries that we typically try to take. So this is one of our listed entry, or yeah, it's a listed entry. This is one of the trades that we try to get into usually. Um, this was actually one of the entries that were one of the target entries for the past couple of weeks. If you guys have looked at the list. So if you look at the list, let me just pull it up real quick. Yeah, so 658 or yeah, 658 or 48. Boy, no, actually. Okay, never mind. I take that back, guys. I got the dates, the times mixed up. It was 648. That was the ones that was coming up for the past couple weeks. We actually haven't had a 658 entry that was targeted. It's been listed for a while, but it hasn't been one of the target entries for the most part. It came up as a target once on December 4th and it was a loss. But other than that, it's been a listed entry, but not a target entry. It's been hitting though. It's been winning certain days. These are the old statistics. These are from last month, December. Yeah, so you can see over here they come up, but it's not good enough to be a target entry. So let me just go over here real quick. Again, I'm going to list the entries as they come up in real time. It's supposed to be with momentum, with All right, so this 658 entry is currently running in profit right now. Oops. Okay. So I'm trying to, well, I was trying to figure out like why this wasn't a target entry. So the reason why the numbers look great overall. So looking at this has a 60% max equity drawdown, profitable probability of 55%, prop factor is 2.44. The reason why this wasn't a target entry is because it didn't align with the minimum 60 point criteria, right? So in order for this trade to be a target entry, you would have to have a 60 point weighted average. So 55 plus 57.14 divided by 200. The probability here is not high enough. It's at 56.07. So with that being the case, this wasn't a target entry, but let's just take a look at this and see if it's a consistent entry long term. So the entry is actually not bad. If you look at the statistics over here, the entry here is just want to make sure the times are right. Okay, so this is what we consider what we call an average strategy. The reason why this is average or it's considered like consistent in a sense is that here, let me just show you real quick. So I use a rolling basis, like I mentioned earlier. This is a 20-point rolling basis. This is a 40-point rolling basis, and this is a 60-point rolling basis, right? For the sake of understanding if the strategy is consistent, we're going to disregard the direction of the trade, right? I know right here, so the trade analysis, the higher probability here is for a sell, but they're pretty much aligned, right? They're like really close. So this right here, I mean, yeah, if you were looking at the list and this is again here, I'll show you why eventually, well, I don't want to say eventually, but looking at the data and stuff here, the direction is going to eventually, in a sense, not really matter too much, right? Because in a sense here, we're really looking at the overall. So it does matter right now because we're using it as a criteria, but in the future, this might not matter, right? Because this right here is this is a confluence that we're adding to it, right? So I just want to make that clear. Uh, the thing is, we want to have a stat. So the data over here, this is based off both directions, right? So the data that we're looking at right here, this is both for buys and sells. So what we're doing here is we're looking at the raw data, and then when I'm picking the direction of the trade, this is a more of a discretionary aspect of the trade, right? So I'll try to explain it a little more. I mean, it might make sense to you, it might not. But in a sense, if you understand how quant trading works and how statistics work with putting these strategies together, you want to have a baseline, right? The baseline is going to be basically everything but the direction because you have the time, you have the momentum, you have the max drawdown, you have and so take this off too. Take off the weighted and take off the direction. Basically, if you want a standalone just bear strategy, it's going to be all of these statistics except for weighted and except for direction, right? Because for me, what I'm doing is I'm creating this statistic here. This statistic here isn't it's not standard, right? Because if you look at the testing here and the data that we have, this stuff is standard, right? Max equity drawdown, both directions of the trade, profit factor. And then for me, I had my discretion, right? Look, okay, I want to pick a specific direction because I don't want to be taking both trades. But in a sense, you can take both trades in a trade like this because they're very similar, they're very close by. Um, it would make a difference if like the long position, we'll find an example later. It'll make a difference if the long position is like 20%, right? If this is 20% and then this is 80%, obviously I'm only going to go with one direction, right? But with something like this is a good example of a trade that could work in both directions. So again, this is what a normal strategy would typically look like. This is a 20 trade sample. It shows that it has a 6% max equity drawdown, 55% probability both direction buys or sells, and the profit factor of 2.4. Now going over to the 40 sample over here, this has a 12% max equity drawdown, 47.50% probability for both directions, and a 1.8 profit factor. You guys can see over a period of time, it starts to weaken, right? This is called alpha decay. So with this being the case right here, that shows you that over a time period that the alpha starts to decay. That's why you can't take this specific entry at 7 or 658 every single day for a whole long period of time, right? That's why we're not just taking one specific entry. We're always looking for what's the good trade at the time because it's going to decay over a period of time, right? So like for example here, this is 20 trade sample, 40 trade sample, and this over here is the 60 trade sample. So see how it's pretty consistent. It's not like changing a crazy amount, right? So like this goes from like 6% max equity to 12%, so it kind of doubles, right? And then 27, so it doubles again right there. But you can see over here that the win rate profitability stays the same, right? It's about the same amount. So like it goes from like 55, and then over a long period of time, it goes to 47, and then drops down slightly to 40, 41. And the profit factor only changes a little bit too, right? It goes from 2.4 to 1.8 and 1.3. This just shows you that this exact entry at 648 at 658, this entry will work for right now for like a 4 week period, and then for like the next 4 week period, it's not going to work. That's how every strategy works, right? So if you guys have traded different types of strategies, support and resistance, breakouts, break and retest, you'll understand that like during a certain period, like say for example, this is January, it works really well, and then from February to March, it kind of sucks, and then from March to what the fuck, I don't know, or whatever, January, February, March. So like January to February, it's good. February to March, it's not so good. March to April, it's like back to working again, right? This shows you that that's the life cycle of the strategy. So yeah, this one right here is not a super great entry to take at all times, but let me show you guys another example where it works. Like this is going to be an example where this strategy works very, very well. And I mentioned this to Mystige yesterday. This is like a unicorn strategy or a unicorn time. I found this yesterday and this was different. So 40, 20, because so you guys can see over here, I'm just show you real quick before I change the statistics. And don't worry, you guys are not missing out on any trades right now because there's not really anything to take at the moment. So look at this profit factor, right? It's at 2.4. This is really good. If you guys are looking at this statistic right here, this is like you want anything above two, this is like amazing. If you can find something above two in a longer scale, that's going to give you what I call unicorn status, right? That's like a trade that's like you could take that trade every single day and it's probably going to work. Um, and looking at this here, so this is why it's important to have the data behind you because the data here is going to show you that like this strategy is really good or this entry time is really good on a longer scale. So let me show you guys real quick. This is a 702 entry with a 40/20 TP stop loss. Like it's pretty crazy to see this. Like, okay, so look at this. So this is using a 40/20 TP stop loss. This trade at 702. I was gonna take this one today because I was like, man, this is such a good strategy. So like looking at this one over here, this has a 4% max equity drawdown, 65% probability both ways. That's really, really high, right? And a profit factor of 3.537. This is really high. This is what people will call unicorn status, right? Anything above two is elite status. But you go up to three, and this is crazy, like unicorn type status right here. This is within a 20 trade sample. So over 20 trading days, this is the statistics here. So this is great. But then you're like, okay, what does this work really well long term, right? So now you start to like look at the higher. So here's a 40 sample, and it's still really good, right? 7% max equity, win rate of 55%, prop factors still above two. This is really high. This means for like 8 weeks or basically 2 months, the strategy was profitable nonstop. It was still great. So this shows you that okay, this is consistent. But here's where it really kind of shocked me a little bit. Like you go over here to the 60 and it's actually better. So it was better over time, which is you don't really see this ever. This is like 5% max equity drawdown. So it goes, usually it decays, right? That's what we just talked about. Like you start from like a small sample and then you go bigger and you go bigger and it starts to decay. That's why you can't always take a certain entry every single day. But looking at this one over here, it actually gets better with time. So it kind of slows down a little bit for like the 2 month period at like 7% or whatever. And then it goes down to like 3 to 4 months and it's actually better, right? So I'm trying to find these strategies. I'm trying to find these exact times that are really, really good that are like unicorn status in a sense. And then I'm gonna like this just might be the entry that I take every single day, right? Because if it hits every single time like that, I mean it just makes sense to take that specific trade. Um, instead of being nitpicky with like certain entries. So I have that one listed right now already on my list. I'm gonna keep playing around with it and try to find more of these types of entries, but there's only one that I found so far. In order for me to find these, I have to like go through different types of TP stop loss parameters and and looking to see what is consistent long term. So. Yeah, you'll see me start doing this pretty much every day. What I'm going to do is what I'm doing here is I'm creating the list of trades and I'm testing all of them on a rolling basis because this will give me an idea of like what is actually working long term and what's only working for the this period of time, which is fine. We want something that's working right now, right? We don't care about what's happening. I mean, we do care, but we don't really care as much because we want to know what's going to hit right now and not what's going to hit or what's been hitting like a year ago, right? But if you have the consistency, it's going to help a lot more because it's going to allow you to take more entries with more confidence. So, yeah, back to your question over here, Mendez. You were mentioning about the 658. Yeah, it was for a sell, but like I mentioned before, that's going to be something that we're going to be using the data to see if like the direction will need to be required, right? Because again, the weighted average and the directional, this is all for my criteria. Right. So you're going to take some criteria, you're going to put some criteria in, whatever you see is better, you're going to swap stuff out, but you don't want to overfit. Overfit meaning that there's too many requirements here to be looking at. Because if you have too many requirements, you're just not going to have any entries, right? So for example, here, if I was to take off the weighted average, we'd probably have more target entries, but we don't want that, right? We want stuff that's higher quality. So. All right, let me take a look at the chart real quick. So we had one entry there. I'm going to update the spreadsheet as we go. So the 658, that was a win, or that was actually no entry because it was for a sell. And then the 659, also no entry. And again, that's another thing that I was just mentioning, right? We have a lot of no entries lately. And that might be because of the criteria being too heavily impacted in one direction, right? Meaning that it's just a little too strict. Which is fine for now, but in the long term, it might be something that we might want to look into. Anyways, iPhone said, isn't the purpose of the algo to adjust to newer data anyways? Yeah, no, that's the thing. So that's what we're using the algo for, but we're using the rolling basis for confluence. Does that make sense? Because it could be working for like right now, but you want to make sure that it's actually working long term, right? Because like if you're just going to be focused on the short term, it's like a coin toss, right? You can like, for example, if you were to like, for example, right now, we'll just say 714. If you were to take this trade right now, like, wouldn't you want to know if like the strategy was working like a month ago or 2 months ago? Because you want something that's consistent, right? You want something that's not just working for today, but you want something that's been working for like say for example, it's working right now. It didn't work last month, but then it's working the month before. You can see that there's seasons or yeah, basically seasons. Because that's how strategies work, right? If you've traded, I mean, you've traded like different strategies over time, but basically, if you've traded different types of strategies, you'll see that and I'll kind of we'll just use this as an example, like for month to month basis. So we'll say for like January, we'll just say you were applying support and resistance strategy, right? It works for a while, like you're okay, it's good. I'm in profit. This is just your equity chart. And then for this month of February, then it sucks, right? And then it comes back up and then it sucks, right? So this could show you that, yeah, you want to use the algo to identify when it's good and you want to avoid when it's not, right? And you want to keep using it when it's good. Um, like having a strategy like this is good because you can see that it works. Oh crap. You can see that it works during certain periods, right? But what you want to look out for is if your strategy is only working for 1 month and it sucks for every other month, right? That's why we're using the rolling basis here. Because a rolling basis is going to show you that okay, it's good for this month, but did it suck a lot like for the past 4 or 5 months, right? Because if it's sucking for the past 4 or 5 months, this strategy is not, it's just it's a fluke, right? It's like one of those things that just works for a short period of time. So that's why we're using the rolling basis here. That's why I was showing you guys earlier that like sometimes or you'll see that it'll work well for the 20 trade sample, and then it'll suck for the 40, and then it'll be good again for the 60. So it shows you that it was good for 1 month, and it sucks for 1 month, and then it was good the previous month. So like with having that data, you're like, okay, maybe I should avoid this trade during October, but I'll take it during September, right? Because then you'll know that, okay, this works for 1 month, and then maybe next month I'll just stop trading at whatever the time this is, like at 7:16 or wherever it may be, because at that time it's just not working very well. So, yeah, like I said, all this stuff is there. There's reasoning behind why we look at this data and why I use these rolling bases. Um, I'm consistently doing research on on quant data and analysis and stuff like that. So what I saw and what I found over like a period of time is that a lot of them use analysis for like rolling samples. I try to do 50 and 100, but it's just kind of far out. We don't really care what's happening 50 or 100 trades back because that's like, I don't know, like a 6 month period. And we don't care what's happening 6 months ago. We care about what's happening within, the first couple months. So anyways, we have an entry that's running right here at 7:16. This let's pull up the data for it. So if you guys have my algo list, this is the next trade at 7:16. We'll see how the statistics look on a long-term basis or a rolling basis, I guess. All right, so the short position is currently running right now. The 7:16 was for a buy, so it's going to be a no entry. So again, going back to what we were just talking about, Mendes, um, and I'm not going to pull up the list of trades yet, but like again, like the direction, I think that's something that might need to be rethinked, right? Because there's a lot of trades here which came up and they all won, but they were skipped because of the obvious, we were looking for a specific direction. Let's take a look over here at the trade analysis. So actually, now looking at the trade analysis, this is actually a trade that I would have skipped. So the example earlier was 658, they were really close by, right? They're both at like 53, 58. This is where it's 71% for buys and 38% for sells. So in a situation like this, I'm like, all right, maybe this is one of those trades where I wouldn't take the trade against it because it's so off. Now let's look at the rolling statistics for it. Okay, so here's an example of a strategy that sucks, or not a strategy, but a time that sucks, right? So right here, you can see let's just not look at max equity drawdown. This is not super, super important when we're looking at the rolling basis. It's more so going to be the win rate and the profit factor. So right here in a 20 trade sample, it has a 50% probability that it wins both directions. The profit factor is 1.987, right? That's good. But this is a short term good. Going over here to 40, this is where you start to see that the strategy or this time has a lot of holes in it, right? And this is why I'm glad we didn't take the trade here if we would have taken it, because it shows that within a 40 trade sample, it has a 35% probability and a profit factor of 1.05. This is not good because you want to factor in slippage. And if you want to factor in slippage, you got to put some percentage drops here, right? So this is barely making profit, like just very barely. And then now we go over here to the higher one, and now it's not profitable, it's negative. So with that being said, this shows you that this specific entry at 7:16 or whatever it may be is not a good entry. I mean, it could probably still win and it could probably still hit, but just looking at it from a long-term scale, this strategy is not consistent long-term, right? And again, this is why it's important that you look at this from a long-term scale because you can see that, okay, this here is working for right now, but over the past 3 months, it hasn't been working. And if you look over here over the past 3 months, this thing goes through massive drawdown, right? So it makes it not worth the risk in a sense. Not to fade the entry, but just looking at it, the probabilities don't line with what I'd be looking for. Not to say this trade's not going to hit. I mean, probably still going to hit. But this is one of those trades where it's like, okay, I wouldn't feel comfortable or feel confident taking it. And it was also for a buy, so it wouldn't really matter. And it's crazy. All of the entries today have hit. That's crazy. I mean, it's not crazy, but all of the entries that I listed for today, they're all winners. If you were to disregard the direction. So I'll just put my trades up here. I don't really care right now because I don't even know if our entry later will show up, but here, let me put our list of trades up here. Okay, so looking at these trades here, if you were to disregard the direction and disregard weighted average, or it wouldn't even matter, you should disregard the direction. All these trades actually hit. So say and let's just, we'll use this as an example. Let's just disregard direction here. Right. So if you were to disregard direction over here at 646, or I think I took these off, but there was a breakout here, obviously full TP. And then 650, 646, that was a full TP. 658, that was a full TP. 659, TP. Yeah, every trade that I listed for today, I posted the algo list yesterday. Every trade that I listed here, they all hit full TP. What a start to the year, right? The algo is on point with every single entry for today. Yeah, Paul said no chop bot needed today. Yeah, you're right, Paul, 100%. The algo is very, very, very spot on for today. Every single entry that I listed here is hit. So we'll see. Yeah, Masisha, what a day so far. Breakout win, algo win, MPSV2, markets moving in perfect waves. Loving it. Yeah, Masisha said according to the yearly data, direction match rate is 49.7, which means if you disregard direction, you would have more trades, but in the end, you would have the same win rate. Yeah, exactly, Masij. That's what I was thinking too. There's going to be days like this where the trades just all hit. But, like I was mentioning, because we're trying to use discretion since I'm taking one trade per day, the direction is important in a sense. It's not very important, but it's important in a sense where like it has, there's reasoning behind it. So, and there's a reason why I put that there, like why I created that criteria. So yeah. Yeah, Talanji said yeah, I had FOMO on that one and he got it. Nice work, Talanji. Yeah, Paul said, yeah, what a way to start the trading year. Super spot on. All right. Well, that's good, right? That's good to see that the algo here is working perfectly how it's supposed to. This is what we talked about. I said January is probably gonna be a good month, and it's looking great so far. So we'll keep following it and we'll see. Yeah, Kenny mentioned nowadays quant edge mostly comes from unique data sets. Yeah, exactly. That's why you have to be creative with what you're looking at. And that's why like you can't be very linear, right? Like for example, we were only using a 20 trade sample here, and that's very linear because you're just looking at what the short term is. You have to be creative. You have to be able to mesh things and understand how to look at things from a different lens to find, your alpha. That's really what it is. That's why quant researchers are like working around the clock, right? They have a baseline of a strategy or a foundation, and they're just working around the clock to make it better and identify discretionary things to add on to it. Um, yeah, exactly. Masisha, let's get out of that early winter shop. I think we're starting to get the directional market we wanted. Yeah, I agree with you. You're fine, Solange. It's already on the chart, so you're all good. I already leaked it myself. It's okay. All right, let's take a look at that entry for later. Here, let's just take a look at the 741 real quick. This is probably not going to be consistent, but it is what it is. Like this is an against momentum trade. So like I mentioned this to you guys earlier, the against momentum trades are usually not very consistent, but we'll still look at it to see, what the numbers look like. And yeah, guys, so this is like a surface level. Well, I wouldn't say service level, but yeah, this is basically service level quant trading, right? Because we're not really digging deep. Like we're digging deep into it, but not that deep into it. You guys can see a lot of people think that quant trading is easy. It's not. It's just as hard as regular trading, but at least you have the probabilities in your favor, right? Like you can trade and be confident about the trades that you're taking. So okay, here's the trade for 740. Looking at this right here again, I'm gonna ignore the max equity drawdown because we already had it's good right now. What you want to focus on is a win ratio, right? Win ratio and profit factor. So the win ratio with a 20 trade sample is 50%, profit factor is 1.9. Looking over here at the 40 trade sample, it's 45, profit factor is 1.63. That's good because it's supposed to decay over time. And then over here, so this is an against momentum trade that is actually not super bad because it's going through average decay, right? It shows you that, okay, over a time period, the strategy does not work. I mean, it starts to die out, meaning that this 740 entry is not going to be on the listed entries for the next couple of months. It's probably by the end of this month, it's going to disappear from the list because the consistency is good right now, but it goes through drawdown phase right here where it ends up not being like super, super great. It's still good, but it's not super great. So you can see here, it's still profitable. You can see it goes from 50% to 45 to 38, which from here, this might be a 3 to 4 month period. And then from here, it might pick back up again. So it goes down to a drawdown period and then it starts to end up turning the other way. Yeah, Masij said, well, in my opinion, trading technicals is not real because every single one has been back tested and they're way too overused. Quant is the only way to go, only way to do it. Yeah, and I agree with you too, Masij. That's why, like, when you see, or I mean, a lot of you guys trade technicals, right? And there's nothing wrong with technicals. If that's how you like to trade, you got to trade your style. But, again, using this here, let me just draw the quadrants of like month phase, right? If you guys trade technicals, you'll see that you don't really find consistency long term. Right? And that's where the risk management comes into play and discretion comes into play, right? Because if you're trading just off technicals and you have a systematic strategy that you're applying off technicals, you're not going to find a lot of consistency. You're going to see a lot of like good months and bad months and good months and bad months and good months. See, the people that are actually good and are consistent using technicals where they start off and they just consistently do well, because we used to trade technicals and we consistently did well, right? The reason why we did well during this period is because of my discretion, is because I was making the decision to take certain trades. We weren't trading systematically. It was through discretion and risk management, of course. Some months I was using, um, negative risk to reward because we were just scalping really quickly in and out of the positions. There were some months where we were doing one-to-ones. There's now months we're doing one-to-twos. That discretion is what makes technical traders good, right? It's not the technical strategy. If you do the statistics and the numbers on technical strategies, there's no technical strategy that's actually profitable if you do it systematically, that for a long period of time. It's the discretion that really that improves it and makes it better. It's the person who's applying the strategy. That's why you'll see like if you have like 100 people who are doing supply and demand, and then you have another 100 people who are doing supply and demand, same exact strategy, you'll see that there's going to be some people that are going to be profitable and some people that aren't, because some people have their own discretion while other people's, if they just follow the strategy as is, they're probably not going to be doing that well. Because you can quantify a supply and demand or a support and resistance type strategy, and you'll see that it's not really as good as people may make it seem. It's it just kind of depends because there's always going to be alpha decay for those types of strategies that are heavily used. Yeah, exactly. And Masij said the issues you can't quantify discretion. Yeah, exactly. Unless you spend millions in deep learning. Yeah, 100% Masij. That's why for me here, guys, I have these trades listed, but then with my discretion, I'm only choosing like one of the trades, right? Even though these trades all hit for today, I'm only choosing one trade because the numbers and statistics work well on that one. And I'm also going to make my discretion to take it whether it meets criteria for the directional buy, right? So again, if you guys are looking at my target entries, I look for target entries that have above a 60% weighted average, a profit factor of at least 2, and a max drawdown of under 10. The reason why I do this is because there's alpha decay over time. So if we have a 20 trade sample and it shows that this strategy is strong during a 20 trade sample, you want to see that it follows through on the higher sample sizes, right? And if it falls through on the higher sample sizes, you can understand that, okay, this strategy, it might work, it might not work, but at least you have the confidence that, okay, the statistics and the numbers line up. So this strategy should work, but if it doesn't, I'm okay with that. And I'm gonna try it again tomorrow. So yeah, just something to, obviously keep in mind here. So I'm just updating this real quick. To show the statistics for our upcoming trade. All right, Masij. Masij said, okay, got me 3 wins and he's done for the day. All right, Masij, we'll see you back on Monday. Yeah, and what Masij mentioned well, he said there's a reason why hedge funds don't trade technicals. It's too opinionated. Yeah, and I agree with you 100%. That's why I can't really trade technicals anymore. As much as I have a background in technicals, I can't trust them anymore with, operating the hedge fund because um, you have to be very spot on when you're starting to manage money, of course. Like you can't be using discretion for stuff like that. It's just a different way of trading. Yeah, Talanji said technicals are as strong as the amount of people that use them, but so is manipulation against them. Yeah, exactly. So the reason why a lot of these strategies have, alpha decay is because when too many people are using them, other strategies are going to be fading their entries, right? That's just how the market works, of course. It's supply and demand. And I don't mean supply and demand as a strategy, I just mean as a theory, right? So it's just stuff to keep in mind, guys, if you guys are trading a certain way or if you're using a certain strategy. If there's a way to quantify your strategy, I would highly recommend you do it. Because having the data and the statistics here, it helps dramatically. It's just crazy how much having the statistics here will help with improving a strategy, understanding, what to follow and not to follow, where to make changes, etc. But yeah, so here are the statistics for the MPS V2 for uh, for basically all the data that's available. So if you applied the MPS V2, this is a sample size of 1,139 trades. So if that's one trade per day, um, let's see, so 5 times 4 times 12, it's 240. So there's 240 trading days, sorta, not exactly, but sorta, because it doesn't factor in holidays. Well, let's do the math here. So like 139 divided by 240. So this is basically about 5 years of data. So over a 5-year period, this is how much profitability it has, which is great. I mean, this is raw data with like no discretion, right? Other discretion that we might apply with this is so if we don't trade during the sessions, or if we do trade during the sessions, let's see if it goes up at all. 35 to should probably go up a little bit. Goes down a little bit actually. So this is actually this shows you that it's good to not trade at the sessions, right? Because it goes down a little bit by 1%. But if you were to avoid trades at the sessions, profitability is obviously better because you have more trades here. We also have more losses. Yeah, so you avoid about like 200 trades or so, or 100 trades, and your profitability goes up quite a bit. This is a big sample size. 5 years of data shows the MPS V2 is profitable. If you take every single trade every single day or during that period between 6:30 and 8. So there's an MPS V2 setting up right here. It's waiting for the pivots to cross. Once the pivots have crossed, then it'll be looking for possible entry right there because we do have the trend here to confirm it. All right, guys, if you guys have any questions, feel free to put your questions in the chat. Next entry is going to come up right here at 7:40. This is going to be against momentum. We looked at the statistics and the data for this trade. This trade's actually not too bad. But this one over here at 7:58 is going to be our target entry for the day. Let's see, Talanji said that triple confluence data got to be unicornish. Yeah, no, exactly. Once Masij he's still currently working on it. Masij is doing a really good job with this stuff, guys. I'm glad we have Masij in our community because it's like, I think for the longest time we needed someone with a coding background to really help with our strategies because our strategies were good, right? Our strategies are good, but we needed someone to like really help us understand like the actual numbers behind the strategy. And thankfully, I don't even know how Masih found us, to be honest. He just kind of joined the group at one point, like recently. And yeah, he has a deep background in coding and data engineering and stuff like that. So he's able to put a lot of these strategies into yeah, it's crazy. I mean, it's a win-win for both of us because Masij is still in college right now. Well, he already went to college, but he's back in school to get into finance, right? He wants to do this type of stuff for a living. So he had no trading background and no knowledge. And the crazy thing is that he got connected with me. So I have a big trading background. I've been trading for like, what, 15 years now, and he has a coding background. So basically, all of our strategies here that we've been using for years, right? This proves that the strategies we've been using are actually profitable. Like it's easy for someone to tell you that a strategy is profitable just by like telling you, right? But having the actual back test here to show you shows that what we've been doing for the past, 8 years, because I've been trading live with you guys for 8 years. It just proves that over the past 8 years, what we've been doing here actually works. And it's a relief, right? It's a relief to have this data behind it. So yeah, because it's funny. Like you see a lot of these people on YouTube and on Instagram that'll show you a strategy and they're like, oh, this has like a 99% probability that it wins, or like it wins 99% of the time. And then you're like, okay, let me put this strategy into code. And then you put it into code and you're like, it's not even profitable. It's you guys have probably seen those pages before. There's other coders that I've seen online. Um, and they do that literally. Like they'll go and they'll look at like these crazy things that people are saying that their strategies work like super well, and then the coder puts their strategy into a backtest script, and it shows that it's not even profitable, which I think is like it's so crazy that people fall for it all the time. So yeah. Anyways, I mean, since we're like close to the public, I think this is going to be very super beneficial for us. Masij also created a backtest for the breakout V3. So every day he's kind of working behind the scenes trying to help us with this stuff. Um, Yeah, so here are the trades for the breakout V3. I know some of you guys like to apply the breakout V3. Strategy actually works pretty well. So this right here, um, I mean, this is a really good strategy too. You can see over here has a profitability of 45%. Let's go like 2 years data. I mean, it's still pretty good overall, entire history. So here's where like the big question lies with this. If the strategy is profitable, and here it is. So it's not super profitable, but it is profitable still over 1,000 trades. So if you can go 5 years of data and your strategy is profitable, that's a gold mine, right? Because now that you know it's profitable, you just have to add confluences to avoid the bad trades, right? How to skip these bad trades. So again, the breakout V3, we've applied the strategy for years, right? For like 8 years now. This shows you that over a time period of 1,400 trades, the strategy is still profitable. In order for it to be profitable, it just needs to be above a 33%. And this is using a 60/30 TP stop loss. If you want to change it to like 40/20, we'll see if it actually does better, right? So it's like 34% there. I changed it to 40/20. We'll see here if it actually works better. So 34%. And this is how we could make it better to figure out what's like the ideal TP stop loss. And right here, you can see it actually works a lot better. So it jumped from like 32 to like 37. And this is how we just keep improving, right? If you want to base it off not fixed TP stop loss, but use ATR instead, we'll see if it gets even better. And then from there, this is how you kind of dig in, right? You get like the foundational data and you just make a little bit of changes to find out what makes it better. And this is a long period of time. 5 year, if you traded the same strategy, just breakout V3 every single day for 5 years, you'd make profit, right? And look at that. That's crazy. It goes up even higher. We base it off ATR and now it's up 45%. This is actually really good. This is over a 5 year trading period and it's a 45%. This is like a 13% edge in the market over a 5 year period. This is actually really good. So now I'm kind of getting a little mind blown at this because I'm like, okay, well, fuck, I want to play with this even more because I can just find like, and then I can like trade certain days, right? Trade Sunday, trade Monday, Tuesday, etc., whatever, and then trade during certain hours. So yeah, Nick said if I see a 99 win strategy, I instantly block them. Yeah, it's impossible. There's no way there's a 99, and you have. And good riddance to that, right, Nick? There's no way someone's gonna be at 99%. I hate seeing those when you guys see those online, like, oh, well, I made $1 million trading for a week. This one strategy. Or the thing is, if you had a strategy that was that good, you wouldn't share it, right? You wouldn't share it at all. Like my strategy is like it's good, but it's not 99%. And the reason why I share my strategies is that people like you and like Masish. So here's the thing, like putting this into perspective, if I was to secretly trade my strategies alone, I would have never met Masish, right? And Masish would have never quantified my strategies. And if I never shared my strategies with you guys, we never would have figured out what criteria needs to be put to improve the discretion, right? And like in using the sessions, using high lows, using whatever it may be, using the pivots, etc. Um, to to make the strategies better. So like, yeah, there's a pro and a con to sharing strategies. The thing is I don't really share my strategies with a lot of people, so my alpha doesn't really decay very much. But yeah, I mean, this is pretty interesting. You know what I'm going to do here is I'm going to rename this to breakout V3, and I'm just going to have different charts here to kind of identify. Yeah, I think what I'm going to do over the next couple of days is I'm going to take a really, really deep dive into this. Um, to see what's good here. If you guys want access to this, you'd have to message Message, but you'd have to have access to the indicators to like actually use them. So just keep that in mind. Because so Message has this tool here, but in order to actually use it and have the data here, you need to have the actual indicators. So if you guys have access to my indicators or my tools, or if you guys want access to this yourself, just message me if you guys don't already. And then you can get access to the indicators and the tools, and then you can play around with this yourself. This is actually pretty fun. I mean, it's like the like using these tools here is cool because you can think about like how much money you can make trading if you if you really could figure out what here what this can really do for you, right? Because if you can figure out an edge that is, or just any edge at all, really, and then you just take size on those trades, or you use proper risk, of course, like you can make pretty good profit off this. This is using like one contract, I think. See, yeah, I think Miss Siege has it set to like one contract. I don't even know how he has it set up here. But whatever, I'm not gonna mess with it. I think this is one contract. So if you were to multiply that, if you were to do this by 10 contracts, because I'm using 10 contracts per trade, yeah, it's pretty good. Or decent, I guess, with given that this is like the data and statistics that we have. All right, anyways, enough reviewing this stuff right now. Let's go back to our regular chart. We still have about 10 minutes until the actual target entry to come up. Um, all right, looking at this so far, we had this entry over here at 740. This was for a buy. So this trade's currently running. Oh no, it already hit. Wow, this is crazy. So pretty much every entry for today hit, guys. Every entry that I listed for today hit. Damn, that's crazy. Yeah, I know it's crazy, right, Solange? So if you guys have access to the Discord, I post all of the entries under algo. Um, yeah, I posted this last night at 9:07 p.m. Literally every trade that I listed today, plus the breakout, plus the MPSV2, they all hit. So for today, it's one, two, three, four, five, six, seven, eight entries back to back that all hits for today. What a start to the year, right? So that's good. I mean, January's starting to look like it's gonna be a good month. So yeah, exactly. Talanji said smooth market. Thought it was gonna be slow, but it's better. Yeah. It's moving pretty decent. The ATR is actually really high today. 33 ATR for the first day of January. First trading day at least. Let's see. So Talanji said need that snipe data. That was my favorite confluence. Shame we can't really do it with the higher time frames. Is that what Masish said earlier? Let me see. I know you asked about it earlier. I'm not sure if Masish responded to you. Oh yeah, I see right here. Yeah, as long as you said reckon you could do the 10-minute snipe message. Possibly I can create ones that don't require discretion. Needs to be rule based. Yeah, so I would have to because like it was hard for Masiche to actually put these back tests together because he didn't have the actual requirements. So what I did is I gave him the like systematic requirements and he was able to put them into these back test scripts. So I'll message him the requirements for the 10-minute and I think he could put it together. I don't think it's a big deal. I would just have to be very, very exact with the criteria and the requirements. So I'll probably do that. I'll try to do that today. If not, I'll probably get it to him by this week, and then we'll have the back test data for that. I mean, that'll be crazy, right? If we have I think the snipe would be super profitable. Let's see. Hmm. Let's see. Rev said, or no, let's see, Daniel went first. So Daniel said, I feel like in 2024, when we were on a hot streak with the breakouts, there was a major alpha decay. There was 5 times normal viewers in your streams. Yeah, there was, right, Daniel? I think there was like, we had like almost like like hundreds of viewers at a time and almost like 1,000 people per like video when the breakouts were on a hot streak like that. So yeah, I think that did cause a lot of alpha decay because a lot of people were applying it. Um, and obviously, the hedge funds and algos will fade these types of trades if they have enough size to push it the other way. So I agree with you, Daniel. 100%. And that's why like I try to keep these pretty private. I think, moving forward, of course, you guys know that I'm gonna have to take all this today. It's gonna happen today, actually. So today's January 2nd. The regulators are gonna get back to me today, and I think they're gonna tell me to take down the YouTube. I already took down the website. So like, I mean, I didn't take it down, but I took away the ability for people to sign up. And this is what they wanted, but I think they're gonna review pretty much all of my stuff, and they're gonna probably make me take down a couple other things, which is fine. I know I understand why they want me to do that, and it makes sense. Rev said trying to figure out how to use the indicators he created. Do I need to use it with the algo? So do you have access to his tool already or his indicators, Rev? I can kind of walk you through it. Okay, cool. Give me 1 second. I'm gonna grab some water and I'll be right back. All right, guys, I am back. Let's see. I just realized I didn't turn on the alerts for today. All right, I got it on. All right, so let's see what we got here. Entries coming up at 6 or 7:58. Let me check my Ninja, make sure everything's cool. Um, all right, everything's good here. Let's make sure I'm getting any weird disconnects. Okay, so Rev, we were just talking about that. So in order to use the tools that Masij used, so basically, um, here's what the settings look like, right? Yours over here probably say close right now. They're probably set to close. You have to set this to pivots one and two. So like basically the drop down right here, you set this to pivot level one. And this is why I mentioned that you need to have the actual indicators because if you don't have it, you can't set it up, right? So with that being said, you go to your settings here and you set this all to pivot one, you set this to pivot two, you set this to pivot three, etc., pivot four. Um, and once you have that set up, then they should populate on your chart. So try that rev and it should populate on your chart. And then once you have that set up, then you can start to play with the other settings here. You want to have alternate trades only, so it only has one trade per momentum. And if you want to avoid trades at the sessions, you turn this on. If you don't care, you turn it off. And then down here, you can set a time filter. It's on Central Time. So depending on where you're located, I'm in Pacific Time. So for this here, it's a little different. So like mine's like 8:30, but this is 6:30 my time until 8 o'clock. And that's how you would set it up. So try that, Rev. And then if you have any other questions, feel free to let me know. All right. We got the entry coming up here shortly, guys. Yeah, Daniel said hopefully it pulls back up and lines up with the MPSV2. Yeah, ideally that'd be best case scenario, right? See, the problem with this strategy, and we have a pending momentum, so this is gonna be a no entry, guys. No entry for me specifically, and if it closes, it's for sure gonna be no entry. Oh man, I know, right? Yep. Oh my God. Yeah, Daniel said, man, the only one you wanted to take, LOL. There you go. So unfortunately, the only trade that I had listed here as my target entry, of course, it would happen where the opposite signal would come up and there's just no entry. So yeah, it's Longy said GG. Have a good weekend, guys. The sell will probably hit too. Yeah. All right, so I mean, there goes that. Well, the thing is we had a 100% win rate for today, guys. That's crazy, right? 100% win rate for the most part. Exactly with the trade. That's crazy. Anyways, this trade here at 758, it wasn't a trade that I was really looking to get into anyways, and I'll show you guys why. If you guys look over here at the average bars per trade, this actual trade runs for about 20 minutes. It's a long time, right? It's a really long time to hold on to a position. So yeah, if we were to disregard the direction, this right here would actually be for a sell. And I wouldn't be surprised if this thing hits. I'm curious now to see. And it looks like it's about to. If this year hits, it's a 100% win rate for the first day of January or the first year. That'd be pretty nuts. If you guys are in this position, just expect to hold on to it for a long time. Because let me look at, so this is the 40 trade sample. Yeah, this trade just runs for a lot because the volatility dies down at 7 o'clock or yeah, basically 8 o'clock. This trade, even on a 40 trade sample, it lasts for like even the 60 trade sample, it lasts for at least 16 minutes. So for this trade here, expect this to run for at least 16 minutes. It's a long time. Yeah, I mean it's too late in the session. I mean, if you guys have followed me for a while, past 8 o'clock is usually my cutoff anyways. So if this was like a trade that I was looking at, I probably wouldn't have even taken it. You can see over here from the statistic or from the setups that I have that it's not even a trade that I'd be looking at. But yeah, so this is MPSV2 right here. Obviously, I would like the trade to win though. 100%, I would like it to win, especially because Talangi's in it. Yeah, it's just going to take a while, Talani. This is going to test your patience. I think this is one of those trades where you just have to walk away from it and just let it. Or if you want to watch it, yeah, feel free to watch it. But for me, I think this is something that I'd be like, all right, I need to step away and go walk the dogs or do something. Yeah, because the average hold time is 16 minutes. So this trade should hit by 8:14, and it looks like it's about to hit right there. Let's go. Get some volatility on there. I'd love to see the 100% win rate for today. Yeah, I mean, just for me personally, I don't like holding on to trades for that long. It's just a lot of uncertainty that happens within this period. Um, but yeah, no problem, Rev. If there's any other questions, guys, feel free to hop into the chat. I'll hang around for like a little bit longer here. Unfortunately for me, there's just no entries. Why does it say? Let me refresh this. There's a copy there. Hmm. The hell? Why do I have a copy here? This is why I hate having multiple windows open because this is like now it's confusing. Why do I have a second window open here? I don't know why this is here. This is like throwing me off now. I don't know why for my algo history, why do I have a second window here that's like at hmm. I don't know, but I'm gonna delete this one. Oh, I see. Okay, so I was running different data through this one. It's okay, I'm gonna delete this one. Looks like we got a momentum the other way. But all right, I'm gonna add this in right here. So this was that 40 trade, I think that was a win. And then this was a no entry. All right, so no entries for me today, unfortunately. Fortunately, but unfortunately, the overall day was great. But let me check real quick. Trade's still running. Damn, this thing is wicking a lot. Uh, yeah, it's very unpredictable. I'm kind of glad this trade didn't come up for us because I would have been kind of stressed out with the wickiness and the back and forth movement. But all right, guys, if there's any other questions, feel free to hop into the chat right now. Let's see. Yeah, Daniel said big wicks. Yeah, Talani's already at 4R for the day, so he's cool with it. iPhone said instead of deleting the videos, can you just make them private? Yeah, so that's the plan. Uh, iPhone. So with the YouTube videos here, I'm not going to delete any of them. They're just going to be unlisted. So if you have access to the course will, which you probably should have. Everybody here should have access to the course, right? If you guys don't have access to the course, message me. I'll give you access to it. Even if you're not in the premium or whatever, just so you have access to like the videos. So the videos will remain on the course. So you might not be able to find them on YouTube, but you can find them on the actual course. You just have to look down the list. And then if you want to look at the YouTube videos, like the mentoring sessions and the live sessions, like, if you ever want to look back on it, you'll just go over here to module 7. All the replays are listed here. So just yeah, just check them all out because they're all going to be listed on here. Damn, this thing's super wiki right now. and choppy. But yeah, guys, the videos will still be available. They'll just be unlisted. So if you want to still watch the videos, you can find them, but they're going to be on the course. Like they're going to be behind basically a private wall where the general public can't find them. But okay, guys, I think that's it. We're past our live trading session time, 8 o'clock. If you guys have any questions, feel free to hit me up on Discord. Otherwise, no trades for me today, but the every trade here on the list pretty much hit target. So basically 100% win ratio for the year so far, if we're basing it off the algo. This is showing that the algo is very powerful. It's really accurate with the direction of its trades. Again, the weighted average and the direction is going to be my discretion. But if you were to take them just as is, looks like they would have played out pretty nicely. So, all right, guys, that's it for the day. If you guys have any questions, feel free to hit me up on Discord. Otherwise, I will see you guys back here on Monday for Market Open.